Yo, CPA Strength here, back again with another Accounting for Beginners video. This video we're going to do accounts payable. As you can see by the title, we've just done accounts receivable, so now I figured it makes sense to go into an accounts payable, since basically the exact opposite. It's like a mirror image. Accounts payable is of accounts receivable. Accounts receivable is an asset, accounts payable is liability. So the journal entries are kind of reversed, so to speak. We're just going to get into this. I am a licensed CPA in the state of Florida. I struggled with accounting. I started watching YouTube videos to try to learn because I was failing my CPA exam and I didn't know anything really about accounting, even though I had a 4-year degree. And I just developed a passion for YouTube, and here we are. We got a DCAler. This is kind of my thing here. It's a debit, credit, asset, distribution, expense, liability, equity, revenue. And if they're increasing on the debit or the credit. I go into this in depth on many different videos. If you're not familiar with it, please watch the playlist, best accounting playlist in the world. So anyways, like I said, this video is going to be an accounts payable. In the first journal entry, your business got $2,000 of inventory on account. So in the first journal entry here, you are going to get inventory, you are going to get products, you're going to get product, and instead of giving them cash, you're going to say, I promise you I'm going to pay you the cash at a later date. So I have an accounts payable to you at a later date. Then our second journal entry, your business paid back the $2,000 on account. Our second journal entry, basically you're going to say, hey guy who fronted me the $2,000, thank you so much. I am going to pay you back now. I have the money. So here's the actual money, and now I don't owe you anything anymore. So that's kind of the real world example. Let's go to the journal entry. Now we got two journal entries. Now every journal entry has a debit and a credit. They always equal. And I'd say the debits are inherently not good and good or bad, or credits aren't good or bad, they just are. But they always equal. So let's go with the two journal entries and work through the DCAler and have some fun with this. Now I am definitely for the underdog, and let's go. I tend to go slow a little bit, tell some stories. I try to do better with that, but I'm telling a story now, so let's go. But I tend to go slow because I really struggled, and the way I really learned this is just by going slow and breaking it down and thinking about it. And another thing is, if this was easy to you and you were getting it, you probably wouldn't be on YouTube looking up this stuff. So I already had an accounting degree, and I really didn't understand accounts payable and accounts receivable. I had to break it down into a very small thing. I had to break it down into, I got fronted $100, or I fronted someone $100, and what did that mean? I understood if I owed somebody money, that's an account payable. If someone owes me money, that's an account receivable. Yo, juicy. So let's go with the first journal entry. Your business got $2,000 of inventory on account. So break it up, because there's always two parts, and that was tough for me at first to notice the two different parts of the journal entries when I started doing the accounting. With a bunch of practice, I did learn. So, your business got $2,000 of inventory. That's the first part, and then on accounts the second part. So inventory is an asset. You're going to know because that's going to give you an economic benefit in the future. That's the definition of an asset. And you're going to write the DCAler and debit. You're going to write this down here, and you're going to write next to it certain assets. So you're going to know what common assets are. That really helped me when I was learning accounting. So your inventory is going up in value because you got $2,000 of inventory. Inventory is an asset. It is increasing because you're getting $2,000 of inventory, so it's increasing. So it is going up. That's going to be our debit. You're going to debit inventory for $2,000 and it's an asset. Why do we debit it for $2,000? Because we got $2,000 of inventory and we know it's an asset and increasing in value. So we go to our DCA alert and we know if it's an asset increasing in value, we're going to debit it. What's our credit? On account. Meaning, hey, we didn't pay you for it. We're going to pay you for it later at a later date. Usually you'd get the stuff, you get the inventory and you pay them cash. But now you're getting the inventory and you're saying, hey, I'll pay you cash later, but I'll basically give you an IOU. I'll pay you at a later date. So we have an accounts payable here. Now you're just going to know if you get something on account or you get, goods and services and you say, hey, I'll pay you at a later date for goods and services, is going to be an account payable. So we know liabilities are mostly payable. Wages payable, accounts payable, loans payable, payables. I am liable to you at a later date. So we know it's an account payable. We know account payable is going to be a liability. And is our liability account increasing in value? Well, we never worked with this. Let's say we never worked with this person before, and now we owe them $2,000. So yes, our liability account is going up. So if our liability account is going up, we're going to credit it. So that's our credit on our first journal entry. Accounts payable for $2,000 because the liability increasing in value. Do they equal? Do the debits and credits equal? Yes, they do. And that's our first journal entry. Are we having fun yet? Are we learning stuff? Are we practicing? This can change your life. I've been doing this for a while and not everybody learns this stuff. I mean, you can make a good living doing this. When's the last time you seen an unemployed accountant? Let's go. Second journal entry. I'm going to say this one's a little bit easier because your business paid back the $2,000 on account. So anyways, paid back the $2,000. Okay, so if you paid back the $2,000, that means you have less cash. So now I always, if you know me, because most journal entries, most transactions have cash involved in them. So you're going to watch some old videos. If you've been watching, you know what to do with cash. You're like, oh, I know what's going on with cash. If it's decreasing, I know cash is an asset. I just know that from all the videos I've watched. Very important. Cash is an asset. Now we have cash, which is an asset, decreasing in value. So that's going to be our credit. So look, your business paid back the $2,000 on account. So you have your cash for $2,000, which is an asset. We know that, decreasing in value. Now what's the second half of that? On account. So basically, you got the good, in the first one, you got the inventory, you got the goods, right, from the plug on account. You said, hey, I'll pay you back later. All right. So that created what? The accounts payable account that went up. Now you're saying, hey, here's my money, here's my cash, and I'm paying you. Now our accounts payable, I owed you $2,000. Now I don't owe you $2,000. Now I don't owe you any money at all. So that account, that liability account's going down. That accounts payable is going down. So if you have a liability account decreasing in value, you're going to debit that. So that's going to be our debit in our second journal entry. Accounts payable, debit. See, here's our debits. Here's our credits. Debits on the left, credits on the right. Does $2,000 debit, $2,000 credit, does that equal? Yes, you've always got to check that out. You know, if you're doing a journal entry like on QuickBooks or something or some software, they won't even let you save it if it doesn't equal. It says, oh, debits don't equal credits. Like, it has to always equal credits. And I want to show you another little thing here. That basically these cancel out, because at the end you don't have anything in accounts payable. You had $2,000, and then when you paid it back, now it's down to zero. So you kind of cancel these two out. You kind of cancel those two accounts out, and it's almost like this never happened. If you got inventory and paid money for it, it's just an extra step. If you have questions, definitely drop question in there. I'll answer them. If you want to see a future video, I'll do that. Anyways, since we're kind of done with the lesson, try to keep this quick. I do want to, two things that I'm thinking about that changed my life. Number one, stopping hating people was my inflection point. Like, I stopped hating myself and other people, and I just stopped hating things. I stopped hating everything. I switched the hate to love, and that really helped me. Another thing is, you've got to love yourself, okay? Before I loved myself, which I just started loving myself about 8 months. It's been about 8 months now. I never enjoyed anything. I had a hole in the middle of my body that was empty. I could not fill it up with anything. No amount of accomplishments, no amount of anything ever filled this little hole up until I started loving myself. Until I started telling myself every morning, hey bro, I love you. I love you. Okay. Before I loved myself, when I hated everything, I would just hate everything. And it made my life miserable. So when I hated myself, when I didn't love myself, I thought, oh, you know what I'm saying? When I'll lose weight, I'll be happy. If I get 100,000 subscribers on YouTube, I'll be happy. If I get a college degree, I'll be happy. If I get a car, I'll be happy. If I get a CPA license, I'll be happy. If I open a successful business, I'll be happy. And every accomplishment I had never made me happy. Never did anything to my self-esteem. Never did anything until I started loving myself. I hated my business. I didn't enjoy making the YouTube videos until I started loving myself. And then I said, you know what? It wasn't these activities that I didn't like. It was that I didn't love myself. So you gotta love yourself, please. Anyway, that's my rant for the day. Hope you learned something. Hope you love yourself. Take care. Deuces.